Well, one of those tech stocks helping to power the gains on the TSX, shares of Lightspeed. That stock is soaring after its revenue did just that. Revenue growing 127% at the point of sale company. And they signaled the good times are likely to continue, offering a forecast that also topped street expectations. For a look at what's driving this, we've got Dax Dasilva, founder and CEO of Lightspeed. Dax, thanks so much for being with us. This actually closed out your fiscal year. And yes. I heard you on the conference call just reflecting on what a year it has been for the company. Acquisitions, raising money, explosive growth. As you take a breath to think about that, what stands out for you in terms of what you had to manage this year?
It has been an absolutely transformative year for Lightspeed. It has been a challenging year for our customers in retail and hospitality, but what we've seen is these businesses adapt with expanding their physical business into digital sales channels, and we've been the catalyst for how they can do that with technology. And so what we're seeing as we go into the reopening, and we're seeing this across, we're a very global company, so we're seeing this all across global markets, is that now we're going to see even more acceleration as new concepts, new customers, new businesses open, and they're going to want to use an omni-channel commerce platform like Lightspeed.
I guess that's the question. To what extent did you pull forward demand? Omni-channel, which is just a way of saying you got to have a physical presence and an online presence, and Lightspeed is trying to bridge both of that. When you say that growth is likely to continue, are you not concerned that perhaps you just pulled forward some of that demand? What gives you the confidence that you're still going to be able to grow at that kind of healthy clip?
Well, if you think about it this way, every new business that forms, or any business that wants to be able to thrive in today's consumer environment, which expects both channels, are going to need a new system. They're going to need a system like Lightspeed, especially if they're in one of the complex verticals that we serve in retail and hospitality. And so if you think about, we're thrilled with where we are in terms of customer locations. We're at 140,000 customer locations, but when you look at the total market, there's 48 million SMBs, of which 7 million are in this complex segment. So there's a long runway for Lightspeed, and I think that we have a unique opportunity to be a category leader for this segment. So there's a long way for us to continue to grow.
So you talk about reopenings being a catalyst, and you have some geographies that have reopened. We've talked in the past about Australia, and you see this huge burst of activity. But I'm wondering, as they remain open, does that burst of activity start to peter out? Are you still seeing it as robust? And of course, that's important to you because you get a cut of those transaction volumes. So I imagine you want to continue to see them elevated.
Yeah, so Australia, retail and e-commerce have had extremely strong numbers this year. I think those businesses were able to transition to selling online, and now we're seeing their physical sales numbers really come back. That transaction volume has been very healthy. E-commerce volumes are at 100% year over year, and retail about 65%. Hospitality has been slower. I mean, obviously, there's some kinds of businesses that can do delivery and curbside pickup, and others like fine dine that have a little bit more, are going to benefit a lot more from the reopening. What we're seeing now in somewhere like Australia is 75% growth in GTV. We're going to start to see that everywhere. I think that there is a lot of legacy systems throughout hospitality, and there's going to be a big sea change in the kind of systems that they're going to need during the reopening. So, I think that our mission is to capture that, and also not to just bring them onto the base platform, but to bring them into all of the different ways that they're going to want to transact with this modern consumer that's
I Your stock is doing very well today, and because of how your stock has done over the past year, you've been able to tap equity markets for financings, once this year, a couple last year. Do you feel sufficiently cashed up to go out and do acquisitions? And I'm asking that in the context of if there is another rollover in tech stocks or a reduced appetite for tech stocks that Lightspeed gets caught up in, will that reduce your ability to go out and raise money and thus do acquisitions?
I think that we have shown that, our last acquisition of Vend was our 12th acquisition. We're showing now with the results in this quarter just what we can do with these companies. They perform much better as part of Lightspeed. We're able to use our scale to get economies of scale when it comes to renegotiating payments agreements with some of the big providers. We're tapping exec talent from these acquisitions for major positions to lead strategies inside of Lightspeed. So I think we're proving that these acquisitions are highly valuable. To answer your question, I think that we're well capitalized. We finished the quarter with $800 million in cash. Post Vend, we're at about 600. So we're well capitalized to be able to continue to execute on acquisitions. But I think the market understands Lightspeed's acquisition strategy and believes that we do well with these acquisitions, and that in order to build a category leader here, scale has been extremely valuable to us. It's valuable to us in being able to roll out something very strategic like supplier market, and also to recently launch that new partnership that we're rolling out with Google. It's that scale that's allowing us to be significant to a lot of the big payments players and allowing us to build better services for customers. So it is an intrinsic part of the strategy. Yeah.
Well,
yeah, it's an intrinsic part of
your view, just as I just want to get your view as a CEO on the jobs market right now. I imagine you're hiring quite a bit to keep up with this pace of growth. What's it like out there hiring talent?
So I think it's competitive. There's a lot of tech companies that are receiving capital. There's a lot of growth happening in tech. The way that we stay competitive is that we have a very ambitious strategy. We would like to be a mega cap company, and we're going from being a point of sale and payments player to a platform player that brings together consumers, merchants, and suppliers. And we're also thinking about how people are going to work within Lightspeed. We just rolled out our PX, which is people experience, which allows a hybridization of remote work and office work. So we think we're really competitive, and it's an exciting company to be at, just because the growth is so remarkable.